You can support this podcast for $3 a month at patreon.com/copytradersclub, or find me on eToro, username Gavin Macaulay, and add me to a watch list for future content. Thanks for listening. Copytraders Club, where you can learn how to make better decisions and more money copy trading. I'm Gavin Macaulay, my name and username on eToro. Today we talk to a long-term investor whose value principles have allowed him to maximize gains in recent years and minimize losses this year. Here we go. Season 2, Episode 41 of the Copytraders Club podcast, and as always, my aim as an eToro enthusiast is to demystify this new and uncharted world of copy trading, understand what are the pitfalls and best practices, and how ultimately to succeed as a copy trader. In chats like today's, the aim is to answer all your questions about this popular investor, and reveal more about them than anywhere else, so you can assess whether they might suit you. Today, I've got Wood for you, listener. I want you to know that. Ben Wood is here, a more traditional fundamentals style of investor whose strong bull market wins and minimal bear market losses have seen him rise in prominence as a popular investor on eToro. And he is rising now, up the stone staircase at the grand entrance to the Copytraders Clubhouse. Let's greet him. Ben, hello. Welcome to Copytraders Club.
Hello, Gav. Thanks for having me.
Well, you're very welcome indeed. And I know you have to answer a series of quick-fire questions to get past security. Ready for those?
I'm ready.
Username on eToro.
bwoodinv. So that's bwoodinv.
Date you joined eToro.
I don't have a precise date. It will be about September 2019.
Date you became a popular investor.
I think that was around February of this year, 2022.
Year of birth.
1977.
Place of residence.
Norfolk, UK.
Profession.
I'm an innovation consultant with my own business.
Briefly state what you aim to achieve on eToro.
Just basically trying to set myself up well for the future with some good investments.
Name one of your investing heroes.
I think I'm going to go for a guy called Peter Lynch.
Name one of your favourite investing books.
It's going to be a book by Peter Lynch, which is called One Up on Wall Street, which is a fairly old book. I think it's from the 90s.
That completes the formalities. Let's proceed now into the VIP section here at the Copytraders Clubhouse. Benjamin Wood, aka bwoodinv. Are you ready for this magical transition?
I think I'm ready, Gav, yeah.
Now we're in the lounge. Benjamin, if you'd like to take a seat, can I get you a little drink?
I'll take a single malt Scotch whiskey, please.
You heard the man, Yasmin. I'll have the same. Okay, so it's Ben rather than Benjamin, I assume?
Either's fine, but usually go by Ben, yeah.
You're from Norfolk, UK. I had Google Maps open looking at Norfolk to try and guess where you might come from, given the details I saw. I'm going to take a punt at... There's somewhere that's got a very pleasing name. Wells next the sea.
Ooh, not too far away. Good guess. I'm actually in King's Lynn, the big metropolis, the big smoke as far as it goes in Norfolk.
And we didn't have to spend too much time faffing around before starting the conversation because you're something of a podcaster yourself.
Well, for my sins, yes. So my girlfriend and her brother are mad on films, and particularly some of the things like the superhero films, the Marvel stuff, which is all over the cinemas these days. And we go to the cinema, or the pictures I call it, every week in town. And at one point we just thought, why not just record that and call it a podcast? So podcast with an asterisk. It's just us chatting, and we happen to record it and upload it somewhere.
And would you like to tell us the name of it, or can I leave a link to it for anyone who's interested?
Oh yeah, that would be great. Thanks, Gav. The podcast is called Just So Jables. Jables spelt Jables, which is the nickname of my girlfriend's brother. So he's in principle, he's regarded as the talent, and we kind of just chip in with opinions, and basically he knows everything about films. But yeah, you can find it, Just So Jables. It's on. Should be able to find it on Spotify and all the usual platforms.
Spoken like a true professional there, Ben.
Thank you. We also have a website if you're interested, which is justsojables.com.
Very good. I read somewhere, I think probably on your website, which we will talk about later, that you say you enjoy designing and building things, creating value and helping people. So what's the last thing you built?
Ooh, good question. The last thing I built, so I started a business in the summer, and I've called myself an innovation consultant. But before that, for 20 odd years, I worked as a kind of a scientific software product developer. So I was working with people like geologists and environmental people working on building software. So the last thing I built was spent about 8 years building a piece of specialist software for geoscientists to use as part of a small team. Unfortunately, that got defunded in the last strategic reshuffle. So here we are now. I'm trying to do my own thing.
And the business that you started a year ago, is that Sunspiral?
That is Sunspiral, Gav, yes. So that's actually myself and my girlfriend, Tracy. So she comes from a background of HR and training, and I come from a background of product management and trying to commercialize software. And also I had a lot of projects in my last employ working with innovation management. So this is things like working with scientists and people in laboratories trying to improve processes, trying to identify target markets, trying to get people towards what I'd say minimum viable products using agile methodologies. So we're trying to combine that at the minute, this business called Sunspiral, as a kind of consultancy and training business.
Part of the mission statement for Sunspiral is we help you to see your products and services through the eyes of your customers. I thought it might be interesting to apply that to your eToro presence, turn it around. How do you think you appear in the eyes of your copiers and potential copiers?
That's a really good question. It's something I've wondered myself a lot. It's actually quite difficult to get that perspective on, I think, sometimes on a platform like eToro. There's such a mix of people on there. And I'm with my professional career and with my business at the moment, I'm used to working on very, very focused, what I'd say, value propositions, trying to get to very specific target markets. eToro is a little bit different because it's a global platform. How do I think people perceive me? I'm not sure. I like to think I'm kind of slow and steady. I'm just kind of always there. I'm not creating too much noise, and I'm trying to keep volatility down to a minimum.
Okay, well, let me give you my tuppence worth as to how you appear to me and how I think you might appear. Like, I've looked at tons of PI profiles and sort of done this before with people. So I think that might be quite interesting. You have a website that you feature quite prominently. That's good. Your website's much more detailed than eToro will allow for, and crucially has a clearer face picture of you. The eToro one is a bit distant, I think. There's more history about you. There's links to Twitter and Facebook profiles from the website, but not from your bio or pin post. The first impression you give, I would say, is of a calm person, a value investor, not making any rash promises, preaching long-termism. And away from the investing side, I'll take a punt here and I'll say, I'm expecting you to be a nature lover, a gentle soul, maybe even a little bit shy.
Yeah, interesting observations there. Yeah, I mean, I'd say you're probably not too wide of the mark, to be honest. The long-termism thing, maybe we'll get into this a bit as we go along. This is a massive bee in my bonnet, long-termism, and it's not just to do with investing, it's to do with all aspects of life. So, investing in yourself and also as part of your career. So I'm glad that's kind of coming across. Shyness, yeah, probably I would say I'm on the shy end of the spectrum. So yeah, I think you probably dialed me in there correctly, Gav.
And why do I think you're a nature lover? Well, you study geology. You live near the sea. That's the expression you used,
Hmm.
referencing the sea. And the name of your company is Sun Spiral, which is a lovely name. And also elemental nature referenced again.
Yeah, I like the way you unpick these. That you unpick people's psychology from a few data points on the web. Yeah, yeah. So I wouldn't class myself, for example, as, let's say, an environmentalist, because when you study geology, it gives you a certain point of view, I think. And to be honest, I originally wanted to become an architect because as I said, I like designing and building things, and architecture has always appealed to me. Unfortunately, it takes a very long time to become an architect, and I didn't have the patience or the resources to do that at university, so I went to geology instead. It's almost like back to this long-termism thing. When you study geology, you're at least over tens of thousands of years and usually millions of years. So I'm a kind of, pragmatic nature lover. Like I like to see the bigger picture. Obviously, climate change is massively in the news at the minute. I take a keen interest in all that. But I'd say my approach to all that is kind of slightly stoical and long term.
Interesting you say that about architecture. I had a very good friend of mine began studying architecture and then was advised to shift, and he went into geophysics and became a geophysicist. The rest was history. There was a famous, not famous, but I don't know if you know the band Pavement. They sang a song which included the lyric, something along the lines of being an architecture student is the equivalent of having an itch you cannot scratch. Never build a building till you're 50. Now, what kind of life is that? And I've known loads of architects growing up, and it's true, it takes forever until they're given free rein.
Yeah, that's the thing, isn't it? As well, that I think when you're a teenager and you're thinking about what to do with the rest of your life, it's like you have these romanticized views of what different professions are, and I think a lot of professions are like that. I actually worked for a brief period for an organization called the Law Society. It was a slight aberration in my career. For a year, I was lured away by an outrageous salary. I've learned it's actually the same for lawyers. The vast majority of them spend decades sort of grinding away at all the sort of the basic projects before they actually end up. The idea of a lawyer is this, eloquent guy in a courtroom defending somebody. That's actually, the 1% of the 1% of people who get to do that kind of stuff. It's probably the same with architecture. I think one thing that actually I studied geology, but I've never worked as a geologist. Starting out in software development, I did a master's degree in computing after my geoscience degree. It was kind of a revelation because, I don't know what business you're in, but if you ever get into coding, you realize you could just build things from scratch. There's almost no overhead. You just need a computer and some time, and you can just build things. So that suits me fine.
Yeah, well, I'm an ex-lawyer, funnily enough, so I can attest to everything you said about the legal profession. Okay, what else do we know from your website? Well, I know you're now an elite PI, which means there's some updates are needed to your bio and to your website FAQs.
Yeah, so I'm just so the thing about what I found with the eToro platform is you'll get changes to your account. So like you get promoted to different levels, and then it takes maybe a few weeks for that to filter through, and then you have to, because everyone gets an account manager. So I have an account manager over at eToro who I'm just working with now to get all of those things sorted out. So yeah, you have to pretty much straight away you have to sign some kind of agreement. There's a non-exclusivity thing going on and all that kind of stuff, which isn't a problem for me. And yeah, a few bits and pieces that you have to work through.
Okay, but you can update your bio and your website pretty quickly.
Yeah, absolutely.
Okay, let's talk about how I came across you. As with quite a few people I'm speaking to recently, it's just a matter of increasing prominence on the platform due to relatively good results in the recent past. You've risen to prominence significantly over the past 6-9 months or so, haven't you?
Yeah, it's been an interesting journey, actually. You first go into the popular investor scheme and you go in you can get in at the champion level, which is the first serious grade where you start earning the commission and bits and pieces like that. And there's requirements for that, like, minimum personal equity, minimum assets under management, as we all know, and all that kind of stuff. I had been using eToro for, I don't know, probably a year and a half or so, and then thought, this might be interesting to try. So I hit the apply button. I mean, the nice thing about eToro is, it's quite simple to do all this stuff once you've decided to do it. And it all just seems to work, which is great. For whatever reason, people were attracted to my profile, and that sort of blew up quite quickly, which, to be honest, I'm very flattered by. I wasn't expecting that at all. Quite an interesting experience at that time, and then decided probably best to sort of take it seriously and start, obviously for the elite level, you have to have the level 3 qualification and so on. You have to have a more significant personal equity on the platform. So I started working towards that. But yeah, it's all happened relatively quickly. I think since kind of the early part of this year, basically.
Okay, well, let's get to know you a little bit better, Ben, when you tell us something that you're very bad at.
Ooh, would it be a massive cop out to say housework? No, probably that's not good enough.
No, well, housework's fine. It's better than saying, oh, I'm a bit of a perfectionist.
Yeah, I think that, I mean, I could probably give you a couple of things. I mean, so admin, I hate. I'll do it, but I don't like it. I wouldn't say I'm necessarily bad at it. But let's pick one. Let's stick with the house again. Let's go for DIY.
Well, very good. That was the same last week. It was the first time we got DIY as the answer.
Oh, was it? So now it's like buses, they're coming thick and fast. So yeah, so DIY. Now, the problem with me, because I'm kind of slow and steady, it just takes me quite a long time to do the project. So I do get them finished eventually. I'm good at starting things around the house. I'm bad at finishing them.
And if you can give me a number between 1 and 10 that isn't 7, I'll ask you a question from the book, The Art of People.
5.
What's the most exciting thing in your personal life right now?
Well, that's easy. That's my current attempt to build a business, which I've never done before. So I've always been an employee. So I graduated university around the year 2000 and pretty much stepped into work. Had like a couple of days off, and then started my first job, which I'd applied for in the summer, and then worked the next 22 years as an employee. So yeah, most exciting thing, and also the scariest thing, is trying to build a business.
All right, Ben, now is the time to have a little look at your bio. Can you read the first 3 paragraphs for us, please?
Investing for the long term with a value-based strategy, attempting to get rich slowly, in quotes. Copiers, please aim to copy for at least 12 months, minimum $500, but really $1,000 is suggested to make sure you can copy smaller trades. Please copy open trades for best performance, and thanks for your support. When picking stocks, I look at the fundamentals and I read the annual reports. I don't just rely on the charts, I try to understand the business before investing. I never use leverage. I stay away from crypto, except for a very small position in Bitcoin, just for the long term. I do not use automatic stop loss or take profit because these can create problems for long-term investment strategies like mine.
I just had a quick look at the trade sizes in your portfolio. You're currently copyable by the minimum amount because the portfolio is very small, obviously, and you don't have too many individual trades within each position. But I guess those numbers that you mentioned there, minimum copy amount 500, but really 1,000 is suggested, applies more to the overall picture when you've got a fuller portfolio.
Yeah, so that's an interest. Obviously, it's an interesting time in the markets at the moment. So I don't know if you want me to speak to why the positions are how they are at the moment at this point.
Well, we will talk about your portfolio later and your cash balance and all of that. So I just wanted to flag you're currently copyable for the minimum.
Yeah.
But what we can do now is look at your results over the years. You've been on eToro since September 2019. So just the tail end of 2019 has a minus 1.82 figure for the year. And then 2020 is your first full year. You finished 2020 with about 24.5%. Then 2021, you had a great year, 75% nearly. And this year to date, minus 8% approximately. So that's the story of your eToro performance so far. I'm going to assume that you've been investing in a coherent style. Your value investing approach has been in evidence throughout your time on eToro. That be fair?
Yeah, I think so. And I think if you look closely at the actual positions I take, there's a small degree of growth stocks in there. But yeah, typically when I say value investing, it's kind of principles based rather than rules based. So in principle, the core of the strategy is value based. So we're looking for companies that are at least on some measure or in some way trading below value.
And you mentioned the term slow and steady earlier, but a closer look at your monthly results reveals that there are some standout months that really significantly contribute to your annual stats. November 2020 was almost a 20% month. And just to remind the listener, 2020, the year, was 24.5%. And then again in 2021, there's a period of 3 double-digit months, March, April, May. Can you talk us through what was going on that gave you such big monthly results in those two time periods?
Yeah, interesting question. I mean, it's probably speaks more to the general market and what was happening at the time. It wasn't in any way planned that way by my strategy. When we talk about slow and steady, I don't pay a huge amount of attention to the market, to be honest. It's back to the core of value investing. You're really just looking at the individual stocks themselves. I'd probably caveat that slightly with the current strategy, which I guess we'll come back to in a few minutes, and why we're sitting on so much cash right now. But going back to those previous performances, I mean, it's probably not anything deliberate. It's just part of the natural variation of the market, I think.
Yes, when I look at the sort of February to May 2021 period where you got lots of big green results, that was when the market was very much shifting to value, and you were already there to pick up that momentum shift, I guess.
Yeah. So, I mean, what you'll notice probably if you look in detail at all the positions that I've held at the different times, I've generally stayed away from, the classic stuff that everyone was getting excited about over the last couple of years and, COVID forwards. Your things like Tesla, for example, and stuff like that. So, the tech stocks, the growth stocks, all that kind of stuff. I deliberately stayed away from that because as we're seeing now, it naturally has a kind of boom and bust cycle about it. And what I'm trying to do with my selections is to try and even that out a little bit. The market, I mean, as you'll know, reacts very, very quickly to positive and negative news in ways that are very hard to predict. So it's in that sense that I say I generally ignore the market and just keep going with my own strategy. So those months where it flips around and sentiment flips around can do you some damage one month and push you up the next month. And I think it's the psychological aspect of trying not to read too much into that.
Do you remember what stocks you were in that period?
Oh yeah, good question. Yeah, I mean, I don't trade around too much. I don't have a list here somewhere. Hang on. Good examples were we holding quite a lot of Investec at that point, which is a kind of general sort of investment management, private equity sort of a bit of everything kind of company. That worked quite well for us at that time. One core part of the strategy through the last couple of years has been real estate. So through REITs, real estate investment trusts. So some of those did well for me and some not so much. I've actually exited those at the minute, which I can talk about a bit later on about the strategy going forward. So there's a good reason for that. Lloyd's did very well, actually, and we're still holding a little bit of Lloyd's. Although I've got a few things to say about what's going to happen with UK banking, possibly in the next year or two, that might be something to consider. Actually, probably Investec was the biggest winner for us in the last couple of years within the portfolio.
Okay, so let's keep going through some of these metrics here. Your risk score. In recent months, I guess, because of your large cash balance, your risk score is very low. Generally, the picture over the last 12 months is kind of, I suppose, if I was to put one number on it, I'd say 4, sometimes average, sometimes max. Is that something you try and control?
I don't try to actively influence the risk score, but there's certain things I don't do, not to try and game the risk score on eToro, but as part of the core strategy. So I think the risk score is basically an outcome of the ongoing strategy. Sitting at 3 at the moment is the lowest I've ever been, and that's, as you say, is because of the large cash balance. So at the minute, I think we're sitting on about 80% cash, which is quite deliberate for the moment. And yeah, historically we've been around 4. I think it has gone up to 5 at certain points. But I think the things I've stayed away from generally, low frequency. So I'm definitely not, a trader. I'm more of an investment style. So I'm not buying and selling and trying to play arbitrage and different things from one day to the next. Stay away from crypto. So in my bio, which obviously needs a small update, it says I hold a small amount of Bitcoin. I don't anymore. Obviously, the crypto landscape is just all over the place at the minute. It's not something I know very much about, I'll be honest. I find the crypto stuff interesting from a kind of theoretical point of view, and some of the ideas behind it and the decentralized finance and all that kind of stuff, and also some of the technology is quite interesting. But I think what we're seeing now is that it really there was some naivety there. So I held a little bit of Bitcoin just for my own amusement almost, and actually made a small amount of money on it. But staying away from things like crypto, which can be extremely volatile, I think helps. Also, I've never traded on leverage at all. I think it's extremely, it's potentially very dangerous to do things like that unless you absolutely know what you're doing. And I'm, completely hold my hands up, be very clear with people. I don't. I'm by no means any kind of statistical trader. I don't do that kind of technical analysis. I'm much more long term, looking at the general health and state of the balance sheet and all that kind of stuff. So I think staying away from those things, like staying away a bit from the crypto, not trading too much, and avoiding leverage have helped.
Copier numbers and assets under copy. Copier numbers as of today, 1,420. And copy value, it says between 1 and 2 million. And your copier graph is a picture of a very sharp cliff face and then a relatively gentle sort of beginner ski slope down to the right. So that would suggest, well, maybe you can tell us, what was the cause of the very sharp rise?
I honestly don't know if I can. I mean, I think if you look at the charts for my portfolio going back 2020 and 2021, it was fairly, steady upward trend. And I think as well, there was general buoyancy in the market at that point as well, which helped a lot of people. But I've thought about this, and a few people have commented on it, and I've had a few sort of offline conversations with people who've copied me, and it was more the consistency of that trend that they were interested in. I think it also helped that eToro put me on particular carousel at one point for, I can't remember what the category was, but I popped up on the front page for a few days and things like that. That all helps, which is great. Yeah, and then I think, it kind of exploded a bit. And then I think on eToro, I think it's going to be interesting in general, actually, not just on eToro, but to think about what's going to happen with people investing. I mean, as you know yourself, like COVID onwards, there was this kind of almost like a frenzy of investment, and like even people within my team at work were getting into it. And a lot of people basically got on board with the investing idea and the idea that you can get onto these platforms and start buying and selling things. And, it was all very exciting. And I think a lot of people poured a lot of money into those platforms and into the markets. I think what we're going to get in the next year or two, and this is going to play out in my position as a popular investor as well, is that sustainable? Are people going to stick around? So, I mean, what we've seen on mine, there's been a sort of, like you say, there's that gentle ski slope, a slight attrition in assets under management and copiers. Partly the assets under management is partly because the market's dropped, obviously. So everyone's assets under management is dropping, everyone's portfolios are dropping. If you're just following the market, which is dropping anyway. But yeah, number of copiers, it seems to have kind of stabilized a little bit. And I think as you say, there was a massive cliff face, which was a little hard to explain, I think, at that point. And it was just a combination of those two things that I became a little bit visible through eToro's marketing mechanisms. And I had, decent performance when people had a look at me. But I think there's a wider question in my mind, is like that thing of, are people going to stick around in the retail investment market? I don't know. I mean, we're going. I mean, I speak from a UK perspective, not so much from a global perspective. You've got, for people outside of the UK listening to this, huge cost of living squeeze, energy prices going through the roof, all that kind of stuff. Economy slowing down. I think we're probably officially in recession now. There's psychological aspects to that, but there's all, there's just general practical financial elements to that, to people's everyday cost of living and paying the bills. And are people going to start pulling money out of the markets? Possibly. Are also people going to feel that they got burnt in the markets? There was this kind of 2020 to 2021 just felt like people couldn't lose. It was like, why would you not invest? Why would you not get on all these platforms and put money in? It's like, and then the stoic in me is like, well, yeah, obviously there's going to be cycles, there's going to be downturns, there's going to be a recession coming. And how are people set up psychologically for that? So I think it's going to be interesting, not just from the perspective of my portfolio and assets under management, just generally whether these platforms, will we get down to a hardcore of people who are really serious about investing, who stay on the platform? And also then what proportion of people were just dipping their toe in the water and now feel that they've been burnt? I don't know. So only time will tell.
When you talk about people taking money out of the market, I saw a post on eToro saying that you added significant equity a couple of months ago. What are the details on that?
So obviously I was sitting at the champion level on the popular investor scheme and working towards the elite level. So I became champion around February of this year, and then at that point got an account manager through eToro. eToro are very supportive of all this stuff. They stay in touch with you. So they obviously outlined one of the requirements is to increase your personal equity to get up to the next level. So I had a pretty hard decision on my hands, at a time when the market was softening and slight sort of elements of anxiety were creeping in around the markets and everything, and the whole area of investing. I was in a position where I needed to add more money. So yeah, that was quite a hard decision for me to make. So at the same time, I'm also self-employed. So as of July this year, I left full-time permanent employment to start my own business. So I've got like a double whammy going on, to be honest. It's like I've got to stick a load more cash into eToro to achieve, because I put so much work into moving towards the elite level. So you have to do the CISI level 3 qualification. That's quite hard. So I'd gone through that, and it was like, are we going to do this or not? I thought, well, let's do it and see what happens. But it was a hard decision to put that much money into the eToro platform. The good thing about eToro is I think it's just the best platform. That's why I chose it. It is trustworthy. It is reliable. So it's, from that perspective, absolutely, completely 100% happy to put the money there. It's just more a question of whether that money goes into the market at this point.
Well, it's also true, Ben, is it not, that you're putting that money in to become elite, to create a more significant income stream as well?
Yeah, absolutely. And I'm very appreciative of that. It gives me certain opportunities, and actually, it was part of the reason why deciding to leave my employment and start a business actually became feasible, because it gives you that little bit of extra cash flow. So I'm extremely grateful for that, and for the fact that eToro operates that system. It's amazing. So yeah, it was a kind of risk versus reward kind of decision. It's like I could, because when you know I've never worked for myself before. I've always been an employee. So it's like I'm sitting on all this cash, and there's a psychological aspect to it. Feels comfortable to have that cash in the bank, so that if you need it, it's right there. The monthly payments are a helpful factor in that, definitely.
Trades per week and average holding time. It says here trades per week 1.11, average holding time 12 months. What does that tell us?
Hopefully, it reassures people that my claim to be a long-term thinker is actually backed up in how I execute the trades. I definitely don't buy and sell on a daily or even weekly basis. It's more always in the time frame of months.
As Richard Templer advises in your bio, don't panic and don't fiddle.
Yeah, and I think that's just general advice for life, isn't it? You can stay busy worrying about all these things and making constant adjustments to everything in your life, and you can try fad diets, or as an example that a lot of people identify with. Sudden decisions to do particular exercises or join a gym. I think it's the same psychological root cause. It's not good for your long-term success to be fiddling with things. Obviously, there's a caveat to that. If you're extremely good at fiddling with things and playing the system and getting an upside from that, then fair play to you. But I don't have those skills and that mindset, so I stick definitely with don't fiddle.
Well, my caveat to that would be that sounds like brilliant advice if you're going to be an investor, but it may not be always the best course of action if you want to succeed as a popular investor on this particular platform, where the copiers are the kingmakers. I'd suggest that maybe fiddling isn't a terribly bad thing to do, on the basis that it might help you to manage desynchronization if you're trimming or toggling, as Jay Nemesis likes to call it, adding a little bit here, taking a little bit off there. You're showing responsiveness to market movements, which is something copiers seem to value. And you're just basically showing activity, which is another thing that copiers like to see, that the PI is, quotes, doing something.
Yeah, that's an interesting observation, and I've thought quite deeply about this. And I think that there's a risk that sits there, that the act of being a popular investor affects your strategy, because there's obviously a system there, and like you say, potentially, certain tactics will either work or in your favor or not. I've generally tried to avoid that. I mean, I think my philosophy is this is the portfolio that I'm building for myself, and it's great that a number of people have chosen to copy me and support me in that. I just have to be very careful that I don't start to fiddle with that strategy to try and game the system. I think partly that would be, disingenuous. I would feel uncomfortable about that. But also it potentially will create problems in the future. So yeah, it's like, how would you phrase it? I mean, I don't just quite want to say playing the game, but there are certain forces and certain effects that happen on platforms like this, as you've observed and just mentioned. I'm trying to be aware of those, but not to allow them to change the strategy.
Okay, let's talk about communication. I'd like to talk more about your eToro posts. It appears your number one fan is Dimitrios C. He comments a lot on your posts. Hi, Dimitrios, if you're listening. One thing I note about your posts is that they're very human. It isn't all data and projections delivered robotically, like often is seen. You tend to mention your feelings and your copier's feelings. There's an empathy about them. Now I wonder, does that set the tone for your copier comments? do you think they remain more civil and cooperative than they might be if you hadn't created that atmosphere in your original post?
Yeah, potentially. I think you might be right there. Different strategies work for different people. So the styles of posts that you see from a lot of traders is very transactional. It's very of the moment, what's happening right now. Like you say, it can often be full of statistics, and some of those posts can be very long. And I think if you're into that kind of investing, and I'd say it goes more actually to a trading approach rather than investing, there's probably huge amounts of information in those posts that are very useful to you. It's just not my style at all, as you've observed. And I think investing is 20% what the market's doing and 80% how you respond to it. There's a massive psychological element to investing, I think. That's what I'm learning over the years. So yeah, I mean, it's just trying to keep things human, keep things calm, keep things reasonable, rational, realistic. I'm never going to be writing posts that are full of predictions or numbers or charts or anything like that.
And also there's an element to it, is there not, of playing to the audience or giving the people what they want. I often wonder how much copiers want all that data, or how much do they just want a friendly voice to sharing where they're at these days.
Yeah, I think I agree with you. I mean, that the amount of noise from some of those posts, I think it's a bit like if you spend all day scrolling through the news, it can generate anxiety, and it can make people think that they're missing out on something or that something bad's about to happen. So yeah, I think that there's a lot of noise. If that's your style of investing, seek those people out and follow them and read everything they post, absolutely, but definitely not my style.
You also mentioned Twitter. I see you're very active on Twitter. You appear to have done one tweet.
Yeah, I think one tweet a year is about where we need to be.
In response to an eToro tweet, which said, "Convince someone to start investing in one tweet," you replied, "Your future self will thank you."
Yeah, that's probably all the tweets I need to do, to be honest. That's enough. Just keep coming back to that one and read it again. But joking aside, I think that I've never gelled with Twitter. I think it's a strange. I mean, obviously, it's changing at the minute with what's going on with Twitter and the ownership. But when I first joined the Popular Investor Scheme, the eToro communications kind of said, Twitter is a good place for all this kind of stuff and promoting. And I've actually found it I spent a few weeks just looking at what other people do on Twitter. And for me personally, I don't think it adds anything. It's a place to post noise and to comment on things happening in the moment from a 24 to 48 hour cycle. And that, again, that's not really me. I've never really gelled with Twitter. In other projects as well that I've done outside of investing, I've made a start with Twitter and just never gelled with it. So platforms like Twitter are great for in the moment news and information and updates. And that's just, my strategy is just different to that. And it's more long term. It's more stoical.
Do you copy?
Do you copy?
Do you copy?
Do you copy? Copytraders Club.
Copytraders Club.
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copytraders Club.
Copytraders Club.
Peering now into your portfolio, Ben, let me describe to the listener your asset allocation. It's very straightforward. You're 100% in stocks, and you have an 80% cash position. So now you can tell us why that is.
Yeah, so there's two main reasons for this. Okay, let's start with the principles. I'm only ever going to buy stocks, apart from that small amount of Bitcoin that I had, which was a very tiny fraction of the whole portfolio a few months ago. I'm always going to be stocks, like 99%, 100% stocks. And it's always going to be a long position. I'm never going to short. I'm also never going to use leverage because this is a long-term strategy, right? So that sets the scene. So I got promoted in September this year to the elite level. And as part of that, you have to obviously put in significant personal equity. Because of the mechanics of the way eToro works, you have to basically, the easiest way to do this to keep people in sync is to just close all of your positions and then reopen them once the new cash has been added. Otherwise, it can skew some of the back end stuff in eToro. So you get advised to do that on the first of the month, which is fine. It just happened to coincide with when there was all kinds of chaos going on in the markets. We were also sitting on quite a lot of real estate positions. So basically what I did was I took that moment in time when the new equity came in for the elite level qualification, the criteria, to basically clear everything down and then reopen a more modest set of positions. The reason for that sitting in cash is because the market is it's all over the place at the minute. People are trying to predict what's going to happen. Basically, I think there's, global recession is on the horizon. I think probably the UK is already in recession. Not quite sure what's going on in the US right now. Probably just hovering around it. But I personally think there's worse to come. That's the kind of position I'm at the minute. So what I'm trying to do for people with that is, because I had to close all the positions anyway, is to reopen a few that I have some confidence in, and to just sit on cash for a moment, just to ease the volatility of it for people. Because I think it's back to this psychological aspect again, that when the market's just jumping around all over the place and generally sliding, it can be very unsettling for people. And that's a well-known phenomenon, and it affects every investor, I think. So it's really just a product of that. It's trying to reduce that volatility a little bit and just settle things down a bit before we pile back into the markets, because I think there will be a lot of opportunities coming up. And it will be good to get back into some of the companies with, sound order books, good balance sheets, good cash flow, good strategies, good leadership, all the classic things you look for as a long-term sort of value investor. And to pile into those. I'd say when the moment's right, that's obviously a value. You can't judge the moment exactly, but I think there's more pain to come in the markets. So I'm just biding my time for the moment, which is why we're sitting on 80% cash.
And what sort of informational input do you have for making that kind of decision? I think you mentioned earlier you don't really pay attention to the macro scenario, but here you are talking about paying attention to the macro scenario.
Yeah, that's right. So you're spot on. And I think I sort of alluded to it briefly earlier, right at the top of the session, that normally I don't pay attention to the market. The current point in time is slightly different for me. So I am paying some attention. One of the biggest indicators for me is going to be around the property market. So I'm quite a big believer in property, and I also have, I'm also a private landlord as well outside of eToro. I have rental property, but it's going to be very bumpy, particularly in the UK. And I think if you look back to if you go back to my portfolio maybe a year or two ago, it was quite heavily UK biased. And I still believe strongly in the UK, but we're obviously getting lots of compound effects at the minute with inflation. We've got the impact of Brexit coming in, supply chain issues, all that kind of stuff, and then just the global macroeconomic situation. I'd like to get back into property, but I feel a big crash coming. So we've got lots of people who've basically gone on leverage into property investments on very, very cheap money, and that cheap money has disappeared. So what's going to happen in the next couple of years when some of those deals have to get renewed? And that's both at a retail and on a commercial property level. So if you go back to when I was in the REIT stuff, we had a few REITs across all kinds of different sectors. So it will be commercial, it will be retail, it will be, leisure, it would also be, accommodation. I think there's going to be a lot of pain across all of those in the next year, let's say. So I'm just kind of, at this point, absolutely taking account of the macro situation, particularly, in the UK particularly, to see what's going to happen with property, essentially.
Well, let's run through some of the positions that are in your portfolio. There are an enormous 5 stocks currently being held, the largest of which is Disney. Did you hear the news today?
I didn't. No. What can you tell me?
That Bob Iger is returning as CEO of Disney. I just saw that on Twitter before we started recording, which is very exciting. It's probably worth a short-time trade, don't you think?
Yeah, very possibly. So, I don't know if you want me to speak to the Disney position at this point straight away, but there's basically 2 ways that I pick companies. One is on pure mechanics. I spend a lot of time reading the annual reports and looking into the financial statements. Well, I'd say if you've never read an annual report before, ignore the first 200 pages, go straight to the appendix with all the numbers in. The first 200 pages are all about the company trying to sound better than they are and make everyone feel good, but the real numbers are in the appendix. Have a look at that straight away, and that's one way I look at companies. And the other way, which kind of blends with that, is arguably slightly more towards a growth mindset, but it's to do with the strength of the brand. I think that not enough is said about this. Actually, the distinctive brand assets of a company are essentially a moat around the company. So if you take a company like Disney and the assets that it now either part owns, wholly owns, or controls, and you can say what you like. So to go back to say like the Marvel Universe films, they ebb and flow a little bit, and people get excited by them, and then they get bored by them, and so on. They are essentially evergreen. And that's what we're looking for. So that's kind of why I've picked Disney.
The second position to discuss is Xylem. Now, this is a company that came up on the podcast before with the PI Lizzie Apokaya, who was quite heavily invested in water at that time. It allowed me to quote Michael Burry from the closing moments of The Big Short, where he said he was going to put all his money into water. But he seems to have changed his tune since then. Prefers to invest in private prisons and the like. A lovely idea. Commoditizing poor people on the more desperate fringes of society. So, he's not investing in water, but you are. So talk us through your thesis with Xylem.
Yeah, so Disney is obviously a global name. It's a huge brand, and almost everyone in the world has probably heard of it. Xylem, not so much. So I also quite like these companies that are big, but also unknown or obscure. So they're not household names. And there's a huge number of these companies who just get on with the business of doing useful things. So that's the position in Xylem is there exactly for that reason. That it's like, yes, pick some high-profile brands, but then also pick some big companies that just get on with doing useful stuff. And water, for example, is obviously an area you can get into with that kind of stuff. So I have a sort of ethical aspect to my investing. I'm never going to go into private prisons, I don't think. As an example, I'm never going to go into anything like tobacco. I'm never going to go into arms. But something like water, I think, is a good place to be, because this is something that actually moves society forward. So, it's engineering, it's natural resources. These are things that I know about from my previous career as well. So it feels familiar to me.
Can you tell us the meaning of Xylem?
I actually can't. Can you tell me?
That's interesting, because I asked Lizzie Apokaya also. Xylem is like the vascular tissue of plants. There's two types of tissue, xylem and phloem. Xylem transports water and minerals from the roots to all around the plant, and phloem transports food and organic nutrients from the leaves to all around the plant. That's where xylem comes from. So it transports water. That's hence the relevance. It's good, isn't it?
There you go. Yeah, very good. Learn something new every day.
Okay, another couple of positions here. Lloyds Bank and Tesco, two UK stalwarts. So how concerned are you at the political circus in the UK with Brexit, the Tories, and Matt Hancock seeking forgiveness in the jungle?
Yeah, it's all quite interesting to me. I don't really follow politics very closely, I have to admit. In the same way that I generally, with my investing approach, don't pay a huge amount of attention to the market. I pay more attention to individual companies. And it's a little bit the same with the UK politics for me. I find it interesting, but I don't spend a lot of time thinking about it. I think ultimately the UK is full of innovation, both in terms of things like products and services, but also finance. And I think that will always see us through in the long run. But I think, yes, definitely. Let's say the next 2 years are going to be painful. And it's going to be interesting to see how people respond to that. Because I think as well, so thinking back to some of the people in my team when I was as an employee before, I had a small team, and some of those people were getting into investing, some quite young people who've never really experienced a recession before. Not, when the global financial crisis hit like 2008, they would have been kids, not really aware of it. So it's interesting to see that cycle come back round again. I think, the UK is particularly messy at the minute. I mean, Brexit, I put my cards on the table. I voted against it. I didn't see that it was a particularly positive thing to do, partly for personal reasons because I was involved in a lot of EU projects. I think a lot of people didn't realise that actually the EU funds a lot of innovation and R&D back into the UK, which is obviously going to end or has ended. Some of those projects are still kind of closing, but so it's going to be a bit messy. And in terms of the actual government, I mean, I lay some of the blame to them, but I think it's a much wider issue. It's a much more macro issue. You can't lay the blame entirely on a specific number of politicians. But I'd say generally I'm quite apolitical.
Okay, and just to round out your portfolio contents, the 5th position you have is Salesforce. So Disney, Salesforce, Xylem, Lloyd's and Tesco. That's quite a diverse spread among a very small number of positions, really.
Yeah, I mean, you could see it as an eclectic mix, but it's basically they fall into two categories. Either they are just the biggest names within their respective markets, so Disney, Lloyd's, Tesco, and also Salesforce to a certain extent that. But I think the interesting thing about Salesforce is that because it's a B2B company. So if you look at something like Disney, it's selling direct to the consumer. It's B2C. Salesforce is selling to other businesses. And this is something I work with a lot from my previous employment. I've looked a lot about how B2B businesses work, how commercialization of products work, how product development works. So I understand quite a bit about that, and I like the way that Salesforce do things. And I think they have a strong brand, but also a good sort of ethos of innovation and generally good leadership. I think the other thing as well is, in terms of my positions, it's either been UK or US. Now, I think also both of those markets, generally, if you buy into, let's say, an American company, you're effectively buying global anyway, because those companies usually sell to, distribute to, and also have plants and offices in other regions of the world. So it's kind of, although it looks like a small number, it's actually in some respects global. If you look at my portfolio either now or back into the last couple of years, conspicuous by their absence have been any kind of emerging markets. I generally stay away from those. So you're always going to see from me a mix of big brands in the B2C or B2B space from both UK and US, basically.
Of all the assets in your portfolio, is Salesforce perhaps the one that you think is best positioned to continue to do well even in recessionary environments because of the nature of it, B2B? It's kind of a sticky product. Once people are using it, there's a switching moat, all of these things.
Yeah. I think you're probably right. I do like Salesforce for that reason, and I think they've got a lot of space to grow into as well. So that they've got a chance to challenge some of the much older, bigger players. So if you look at something like IBM, for example, it's looking at client services, but also like business platforms and business intelligence stuff and CRM stuff. There's a lot of players who've been around for a very long time, and I just think Salesforce just feel fresh and they've got markets to grow into.
Okay, so although you haven't particularly said you're a Buffett disciple, I expect you would agree with the principle inherent in his mantra that his favorite holding time is forever. Now, I looked into your history a little bit, and 7 months ago, you increased by 50% your holdings in some companies, such as PayPal and British Land, stating that these were long-term holds. But as we've just discussed, these are not in your portfolio any longer, so you've sold. What were the reasons for selling?
So the purely mechanical reason was because I needed to close everything down to keep everyone in sync when I added the equity. I will definitely come back to those companies. So I suppose this comes back to the earlier thing we were talking about is does the act of being a popular investor influential strategy, and I think to a certain extent it's unavoidable. So there's a little bit of this going on here that I'd rather people just had a little bit reduced volatility for a while, because we could hold those companies. We could hold them for 5 years and we could come out at the end of that 5 years and find that we made a profit, right? But for the next 2 years, we probably won't. And that might be stressful and painful for people. So I still believe in those companies. I'm just biding my time a little bit to re-enter those positions.
So I think what you're saying there is at least to some extent a shorter time scale when you're on eToro. Does that ever suggest to you that you should be looking for businesses that are likely to do things within a shorter window than you might otherwise?
Yeah, I've thought quite a lot about this, but it's very difficult. This is where it gets into speculation for me, because I think ultimately it's impossible to say. The one thing you can be 99% sure of is that the stock market will eventually rise, okay? But we don't know how long a period over which that will happen. So in principle, yes, but I think it's virtually impossible to predict where that's going to happen. And as I said, I don't get into things like technical analysis. And if you're into that stuff, you can probably see some of those opportunities. I don't know. But the other thing we need to be looking for actually in the next, let's say, 6 months is companies that are starting to refocus on profitability. Because the problem with cheap money that we've had for well over a decade is it encourages people to inflate their companies. So you see these companies reaching extreme valuations on the basis of products which are not even profitable yet or may never be profitable. And there's lots of examples of those that people are learning about now. Some of the biggest names on the planet that have never turned a profit. And it's like, how can this happen? And the answer is cheap money. And that era of cheap money is not coming back for a very, very long time. Possibly not even in our lifetimes. Are we going to have money that cheap again? So the writing
talking about, don't you realize that Jay Powell's about to pivot and get the printing machine out again?
Yeah, this is the other thing we see with what happened with the Liz Truss. I mean, how long was she in power for? A few weeks, whatever it was. So I don't pay too much attention to politics. What I do pay attention to is what the politicians doing and what the government's doing in terms of the fiscal policy is important. But those things are such, slow moving. We're talking about tax changes now that are going to come in and affect us in 5 years, for example. How do we predict the effect of that? Well, I'm sure someone with a PhD in economics could say something about it. I'm not necessarily qualified to say anything. That bizarre position that we had, a few weeks ago where the government was putting its foot on the gas and the Bank of England was putting its foot on the brake, it's just outrageous. As I said, I try not to pay too much attention to what the politicians are doing. I just think this is a 10-year game that we're in now. We've got to be thinking about what's going to happen in 10 years. Which companies are going to survive this? Which companies focused on core products? Which companies focused on profitability? That plays actually quite well into a value mindset, because that's kind of where I've been. I'm sure there are lots of people out there who've made a lot of money off the back of companies like Tesla, for example, that got these hyperinflated valuations. And companies that grew on the basis just of the ability to borrow money or take on investment. It's just not sustainable, and that's the problem with it.
I heard someone on a podcast the other day saying that after we go through this next phase, they expect we'll be transitioning into a market which is they described as a Peter Lynch market. That's the kind of investments and the investing approach that's going to work. But what nobody knows is how long it's going to take for us to get there, what we're going to have to go through between now and then, and how do you navigate those choppy waters.
Yeah, absolutely. Nobody knows, and if someone's telling you how long it's going to last, they're lying to you or they're deluded, I think is the answer. So it does play into a kind of Peter Lynch style. Go back to the fundamentals of the company, have a look what market they're in, look at the core products, but you need to be able to do a little bit of analysis of company financials as well. And the thing that worries me a little bit is people who get into, like the retail investing space, who are picking companies purely on brand power and not looking at the fundamentals. So, this is, classic Warren Buffett territory as well. Go back to the fundamentals. learn how to read a balance sheet, and a cash flow and a profit and loss, learn how to decipher the annual report. And I think actually, if you look at the Peter Lynch stuff, one of the most important things he talks about is debt. So if you look at the debt structure of a business, that can be extremely useful. So if you're looking at profitability, what are the debt ratios? Does it look like they can service that debt? But also, what's the structure of the debt? Over what terms is it repayable? Is it bank debt or is it, corporate bonds? What's the risk associated with it? Is it possible that those debts can get called in when things get choppy? Because that could just destroy the company. So it's things like that you need to look at. Look at the brand power. And brand is important. If a company if it's the number one in the market, that means something. Or if it has evergreen products like Disney does, that's important. But also those companies like Xylem that just get on with the business of doing things that we all just take for granted, water systems, things like that. Peter Lynch talks a lot about that. Go for companies that people have never heard of and do things that are mildly disagreeable or people take for granted. Have a look at the fundamentals. If they're not carrying too much debt and they're focusing on profitability, why not? But it might take 5 or 10 years for you to actually see the upside on that if there's a macroeconomic situation going on.
As you mentioned earlier, you're a fan of UK companies, including property companies and REITs. I was wondering, what are your favourite sources of information for UK companies? Because we're drowning in a sea of information for US companies.
Essentially, for me, the Financial Times. So one of the good things about the eToro, the Popular Investor Scheme, is you get a free subscription to the Financial Times, which I use on a daily basis. So you can get interesting information from there. I think that the only sort of caveat with that is like any media is always biased, and any media is there to try and sell papers essentially and to gain attention. And to do that, they'll often hype up something or make something sound worse than it really is. So yeah, you always usually use the Financial Times as a starting point, and then go off and do my own research. And ultimately, that drills down into the annual reports of the company.
Reminds me of the joke, what's pink and hard in the morning? The Financial Times crossword. Oh dear. And on that bombshell, let's switch to talking about copiers a little bit. What sort of person should copy bwoodinv?
Well, again, it's going to be the same theme again. Someone who's in this for the long run. So if you have long-term objectives for yourself in any aspect of your life, whether that's to do with career or financial success, your sort of outlook is a 10-year one or even longer, then I would say that's the kind of person who would sit well with my portfolio. If you're someone that needs constant information about things that are changing and people jumping on the latest opportunity and giving you stats, obviously, as we've already discussed, then you're probably not going to be a good fit for me. So yes, so anyone with a long-term view for their future financial well-being, essentially.
Is a large proportion of your copier base UK?
Good question. It's kind of hard to tell to a certain extent. I haven't drilled down into it massively. I'm not necessarily. I think there's probably a core of UK people there, but there's also people from all around the world.
As an investor who invests quite a lot in the UK, yourself, on eToro, I don't know if you're familiar with the Felix Falix YouTube channel, but he just did a video about the tax implications of the latest budget and how that applies to your investments on eToro, whether as a copier or as a PI. It's quite interesting, might be worth checking out, because UK is a rich hunting ground for dividends, and a lot of that has changed.
Yeah.
Tax treatment of that.
Yeah, there have been some changes, haven't they? Yeah. I mean, there was what was the threshold, about £2,000 a year or something? They're bringing that down to a few £100s, I think, but it will happen over a number of years, as I understand it. But yeah, it's certainly worth knowing about. But I think the interesting thing with tax is, like, if you start to focus on tax implications of things, it can distract you from the actual strategy of picking the companies in the first place. So I tend not to worry about it too much.
Sure. And eToro being a global platform, your copiers can come from everywhere. There's no way you can bear them all in mind at all times.
Indeed.
So Ben, what makes you so special?
That's a good question. Again, I'm going to sound like a stuck record. It's just my long-term view. I think that's the basic answer, is that I will always take a long-term view in any scenario, investing included, and eToro specifically.
Speaking of eToro, what changes would you like to see on the platform?
That's a good question. I actually don't know.
I'm asking lots of good questions, it seems, today.
Changes on eToro. I mean, I would say, I think because I'm not on there all the time chopping and changing things, it does everything I need right now. I mean, I can see there's probably certain functions on there that if you need to use eToro a lot and you're doing trading and stuff, there might be things that bug you. I'm not in that basket because I don't press the buttons very often. I would say the only thing that can be an issue is the currency. So everything is denominated in dollars, although that's actually been quite useful. So as the pound slid, in recent times, to have that money sitting there in dollars has actually prevented some of it getting eroded. But generally, it's like, yes, you have to move between currencies. So maybe an eToro in the future that's denominated in sterling might be useful. But apart from that, I can't really think of anything specific.
Okay, if you were to put yourself in the role of a copier, what would your approach be, do you think? Talk to us about how many PIs you'd have in your portfolio. What sort of different roles would they play?
Yeah, I've never really thought about that.
A good question.
Yeah, it is another good question. Let's say you've done this before, haven't you? So what would I'd be looking to balance risk, I guess. I mean, it's always the same, for any investing, you're trying to balance risk and reward. So yeah, I guess I'd be looking for, I don't know, let's just say I'd probably copy 3 people. I'd put a small amount into someone who's just constantly on there, constantly updating, constantly opening and closing positions, trying new things, doing leverage, doing short selling, just to see what happens. But the bulk of it I'd probably put some of it into a long-term value investing, and maybe a third of it into a growth stock portfolio or something like that.
What other PI would you say you know best on a personal level?
I don't know any other PIs, I'm afraid. Yeah, so I kind of keep myself to myself in that sense. So eToro gives you an account manager, but they don't really put you in touch with other people. One thing that was frustrating, actually, eToro had its first ever, I think, UK based down in London. They had like an event. I can't remember what they called it now.
PI meetup.
PI meetup, yeah. So I was hoping to get to that. Unfortunately, at the time, I wasn't very well, so I couldn't travel. But yeah, so no, I don't really know any other PIs directly.
That's a very common answer, and was even more common prior to the PI meetup. A lot of people just don't know anyone else who's a PI. They're lone wolves doing their thing.
Yeah, absolutely. So were you able to get to the event yourself?
No. Well, I wasn't invited.
Okay.
and I've only become a PI very recently
Right.
myself, so I was just on the outside looking in. Well, final question, Ben. What's the one question you wish I'd asked you in this conversation that I haven't? And yes, that's a good question. That's the best question of all, I think.
Okay, so the one question I was wondering about, whether you could ask me what it's like to go through the process of getting to the elite level. As in, so obviously you have to do the qualification, for example.
Okay, I've just asked you.
So the qualification, well, the criteria you need to get to the elite, we've already talked about the additional personal equity, so I won't cover that again. But the qualification that you need to get, which is the CISI level 3 qualification, you've got a couple of different options there. I went for the International Wealth Management one. It's got some huge long title that I can't remember right now, but that was kind of eye-opening. So I'm wondering, you're probably going to tell me you've had people say the same things about this sort of questioning before, but I'm in my mid-40s now, and I haven't had to do an exam for a very long time. So probably since university, like in sort of year 2000, and going back to actual studying as an actual kind of student day to day over the course of, I think it took about 3 months to do it, was quite surprising, because when I first learned that was a requirement, I thought, level 3, that won't be too tricky. It's actually incredibly difficult, because you get this huge, great book. It's like 250 pages long, and it's the official workbook for the program. And you basically have to know everything in that book in case it comes up on the exam. And the exams are multiple choice, so it's not too difficult, but in terms of logistics. But you don't have to write a dissertation or an essay, but you have to know a lot of stuff. I'd gone through my own philosophy, developed my own philosophy for investing and how I pick companies, and this curriculum for this study program went into loads of different stuff I've never even thought about before. I think it's a really useful thing that eToro do this, and it's one of the reasons why I'm on the platform, because it sends a signal that they take things seriously. They're making people do these formal exams and qualifications. But at the same time, there's a lot of stuff in there to learn and memorize. You've got to know the name of all the different regulatory bodies. You've got to understand things about, lifetime investment planning. What happens when people retire? What about, estate management, inheritance? There's all kinds of crazy stuff in there that you would never think of, from day to day when you're thinking about doing your own investment portfolio. So yeah, that was quite an interesting process. If people are thinking about doing it for themselves, I'd say don't assume that this is going to be easy, because it's not. And there's a lot of stuff in there.
Yes, if ever I get to the stage where I need to do that, it is a bit of a concern that I'm a bit long in the tooth in terms of not having done exams for a long time myself. So one piece of advice I heard on a previous episode was when I spoke to Mama Furfur, Jennifer Kempson, who's a popular investor, and she was discussing that very issue. It's been so long that she found like a training course online that really helps you with the exam. I don't know if you came across or used a service like that, which I think she found useful insofar as it helped her with direction in terms of focusing in on perhaps what the exam might ask about a little bit more than, thinking you have to know every single detail on every page of that big, thick book.
Yeah. So, when you sign up to this package, if you go onto the CISI website, it's actually a little bit of a confusing website, and it's not entirely clear what you're going to get for your money. It turns out you get a book and the right to book an exam. On there's loads of other stuff, and I don't know if this is the same thing that you're talking about, but they have support programs and training programs that go along with the courses, but it can get quite expensive, and so I decided, I'm quite an academic sort of person. I read a lot of business books, I read a lot of finance books and things about economy and finance history and things like that. So the thought of sitting down and reading a 250-page book, mechanically doesn't bother me. So I didn't use one of those programs. So I can't recommend them either way, really. And I think it would have been interesting to see what they were like, but I decided basically to save my money and not spend it on those programs. But the book is enough to get you through. And I'd say I did read around the subjects quite a lot. So when I came across something, so for example, like capital asset pricing model, which you may or may not have heard of as an investor, it's a thing. You can find out about it online. YouTube's a great place for all this stuff, obviously. There are people who will explain it and draw it and give you examples and stuff like that. So I think I didn't use the training package, but what I did do is every time I covered a topic in the book, I'd then go out and find, this is what they teach you to do at university anyway. If you do an undergraduate degree, they'll say, go to the lecture, get the basic facts, and then go out and do your own research. And that kind of worked for me as well.
Well, eToro seems to be working very well for you in general, Ben. You're doing very well. And I look forward to seeing how that continues into the future. Thank you very much for taking the time to drop by the Copytraders Clubhouse.
No problem. Thanks, Gav, and thanks for inviting me. It's been great to chat.
That was Ben Wood, the most complimentary guest I think we've ever had on Copytraders Club. He certainly thought the questions were good. I feel like Ben is one of those guests that I now know so much more than I did having just glanced at his profile once or twice. With his cautious approach, I would wager he won't go too far wrong as we navigate these perilous seas. That's all from me. See you on Discord and Facebook. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit-chat. We don't know your individual circumstances, etc., etc., and so forth.